Hello everyone, thank you for joining. Good to see you again. So welcome back to my another live stream today. So this is the 3rd of October 2020 and this is on Saturday. So I will talk about stop loss strategy today. Because today is Saturday, the market is closed anyways. So I will be talking about some psychological or money management related topics every Saturday. That will be topic. So especially today, I will talk about the stop loss, how I think about the stop loss, and how to put the stop loss correctly in the correct mindset. It's a topic for today. So once again, thank you for joining everyone. Good to see you. So let's see. Motasim, Dinesh, Rafael, Alexander, Josie, Dcoin, Yorun, and Karim, Jagadish, Femin, WM, Tishepo, and Marusan. Thank you for joining. And Anas, Ivan, Fredo, Tuan, Hendra, and Melanie, and Roy. Thank you for joining. Good to see you. Okay, so one quick announcement is that the new book is released to Ichimoku community a couple of days ago, and it talks about 3 theories of Ichimoku: wave analysis, and time analysis, and price analysis. I deeply talk about these 3 basic theories of Ichimoku, and the new book is out within the community. So if you're interested to learn the essence of these 3 theories, feel free to join the Ichimoku Discord. If you can see the join button on a YouTube channel, that's basically how you can get in. And if you want to see the details, you can click on the below description and find all the perks that you can expect in the community. So let's get started. So just as a disclaimer, this knowledge or this information is basically based on my own understanding. So when you take trades, please do within risk. I won't manage anybody's money, and I never will. I only manage my own money. So, yep. And Marusan, thank you for putting the link on this chat box too. So you can find the link to join the Ichimoku community or the details in the chat, or Marusan post the link. So, as usual, I have created this slide PDF. I mean this PowerPoint slide. So let's talk about this topic. So correct way to put stop loss in terms of the mindset. Okay, so so every time I say about something, I say bad something or good something, because the mindset is very important. So if you still have the wrong mindset, right, towards the stop loss, then you cannot really place it, no matter how many times you take trades or backtest. So these are some of the things that I think it's about stop loss, and one is actually based on the how much, right? So for example, in this market, let's say the Euro USD daily chart, this is going up, and right now the price is in the Kumo, but overall looks to be uptrending. So let's say you decide to buy here. Let's say you decide to take a buy, and then your stop loss, no matter how the market is gonna moving in a wave, regardless of the wave analysis or any lines or price actions, you just simply put the stop loss $100 worth below, like here. So it depends on the lot sizing. If you go for a bigger lot sizing, then the stop loss can be very tight. Or if your lot sizing is less and less, then your stop loss can be wide and wider, based on this number of the how much you risk per trade. So in that case, if you take a buy, and if you just simply decide, okay, I will take $500 for a particular trade, and let's say you take a buy, and maybe the stop loss can be very low, like this. When you go for like a minimum lot sizing, it's going to be very low. Or if your lot sizing is very high, then the stop loss is going to be very tight, like or here, very tight. So, and this is one of the bad way to put the stop loss, wrong way to put the stop loss, in my opinion, because you only depends on how much you risk per trade. So instead of thinking how much you risk, it's better to decide how many percent risk you take per trade. Percent risk per trade is the correct way to put the stop loss. So let's say if you want to risk 2% of your capital, then you decide where you move the stop loss or where to put the stop loss. Because lot sizing or the stop loss, the risk in terms of money depends on how much you have. So for those who have let's say like $50,000, then $500 is going to be just 1% risk per trade. But if you only have like let's say $5,000, then $500 risk is going to be 10%. So it depends on how much money or capital you have on your account. And that's why this is not universal to decide how much risk you take per trade. So instead of doing that, better to decide how many risk percent per trade you're gonna take. So that's one of the important aspect of the market whenever you want to look for the stop loss. So always go for the risk per trade, not based on how much is the key. Or this is something that I used to do too when I was a newbie. Let's say I have $5,000 in account, and I put the stop loss at $5,000 risk below. So basically this is 100% risk, right? If the price goes below, then I blow up account. I lose all the money. So let's say if I have $5,000 and I take a buy here, and no matter which lot sizing I go for, I find the stop loss to be here, let's say. And here I risk $5,000 because I have $5,000 in my account. And this is another, bad example to decide what to put the stop loss, because when you do this, if the price comes back to stop loss, then you lose everything. So that's why I keep saying that risk only 2% of your account. If you're still newbie, then better to go for 1% risk per trade. So that is a very, very important aspect of this stop loss mindset. All right, Melanie, thank you for joining, and Michelle. All right, yeah, please don't type the caps. All right, Yasar, thank you for joining, and Shaun, good to see you. All right, so do UK or another community members post the trades they take in the community? Some members post their trades, but some won't, and it depends on the member. It's not a requirement to post the trade analysis or real trade examples in the community. All right, Mr. Fernandez, thank you for joining. Good to see you. And Marcus, I thought no trade in the cloud is a rule. Yes, no trade in the cloud. That's true. Yeah, I just gave an example of let's say you take a buy here. Yep. All right, Karine, thank you for joining. Good to see you. All right, so never go for like how much you risk per trade, right? Instead of thinking how much risk, always think how many percent risk per trade you take is the very important aspect. And another one, the typical mistake that newbies would do is that and this is also something that I used to do, but I move the stop loss as the market goes against you, right? So let's say you take a buy here, and let's say the price goes down towards this way, and initially you put the stop loss here, but as it keeps going down, you drag it to lower. You move the stop loss lower and lower, so that the market does not hit the stop loss. And this is another bad example for the stop loss. If you move the stop loss after you take a buy or sell, then that's not a good habit. You can always move the stop loss towards the direction of the market. I mean, if the market goes this way, then you can move the stop loss to break even, or even higher to trial the profit, and that will be okay. But if you start to move against your direction, in this case downwards, then that's going to cause a lot of problem, because the risk per trade is going to be getting bigger and bigger. So that's why you don't really want to risk per trade. So to avoid such losses, such huge losses eventually, you want to fix the stop loss. Once you set the stop loss initially, when you take buy or sell, then you have to keep it. You don't want to move it no matter what. So that's the second rule. That is very important, because stop loss is movable. We can move the stop loss anytime as the market goes against you. So maybe we can even cancel the stop loss, right? If it goes down, you can cancel it, and hoping for the price to go towards the direction eventually. But that's not the way the disciplined trader should be. Yeah, so two rules, right? Once again, two bad habits for the stop losses. One is you decide where to put the stop loss depending on how much you want to risk per trade. That's a bad habit. And another one is you move the stop as the price goes against you. Yeah, I say this because once again, I used to do this when I was a newbie. When I was still first year of a trader, initially I didn't put any stop losses. So every time the price goes up and down, I had to keep my attention to the chart all day, and I was so worried if the price goes backwards, I get losses, and I get losses many times, like big losses over time. So that was the time when things were very tough to take trades, and I was always afraid of the risks, or always afraid of the losses along the way. But once I set the stop loss, and once I decide not to move the stop loss from there, or if the price goes against my direction, then I just cut it as soon as possible. Then my mindset became more relaxed, and because I can always look for another chance to take trades. So yeah, that's a very important aspect. So I just gave you two bad examples for the stop losses. So let me give you two good stop loss, correct stop loss. So one is, stop loss should be placed where scenario is broken. So this is a key for today that I wanted to say. You have to create scenario before you take trades, as I have been saying before. And the stop loss should be where the scenario, your scenario, is broken. So let's say you see the market like this, it's ranging, goes up and down, and you expect the price to bounce off of this line, of this support, like this. So you take a buy. So let's say the market goes down this way, and you expect a bounce, so you take a buy. And in this case, you put the stop slightly below the recent low level, slightly below this support line, which is at this level. And the price continues to go down this way. and then you have to exit at this stop loss because now your scenario is broken. So my question is, do you always create scenario before you take a buy or sell? If that's actually, if that's out of your scenario, then you have to be out no matter what, right? No choice, you just be out, and that's it. So, for example, like I think good example in our daily life would be, let's say you have a favorite, like a favorite chocolate, and that chocolate is actually in the specific supermarket only. You can't find that chocolate anywhere else besides that supermarket. So let's say you decide to go to the supermarket tomorrow to buy that chocolate. And then you go to the supermarket and let's say you found the supermarket to be closed due to some emergency situation. Then what would you do? You have to go back home, right? And you have to come back to the supermarket maybe tomorrow or some other day when it opens again. So, but if you just keep waiting in front of the supermarket, knowing that this is already closed today, it's a waste of the time, and also you get frustrated, right? So that's when your scenario is broken. I don't know if this is a good example or not. I just came up with this idea, so I just say it. But yeah, so every day we expect something, for people, for shops, or for anything. Even this YouTube channel, you came here in my YouTube channel to see myself and to hear my lecture here. But what if there is no lectures, right? Without pre-notifications, then you will come back to the channel maybe tomorrow, or you will just give up today and come back whenever you are available. And I think the same rule applies to this stop loss. So we cannot control the world, we cannot control anybody else, we cannot control the shop. So yeah, basically when the situation goes against you, then that's when you have to think about other choices. And that's when we have to put the stop loss. We have to exit once. And that is a very important concept for this stop loss. So again, in this case, you already see that this is a range. Here is a resistance line here, and there's a support line here. And the price goes up and down, you confirmed, and now you see that the price is going down. So, and you expect the price to go up by supported by this line. This is your scenario. But if the price goes down this way, then you have to exit, right? Because we don't know how far the price is gonna go all the way. So by expecting this bounce, you take a buy. And if the price goes down below, breaks this support line downwards, then you have to exit. Yeah, I think this is a very simple mindset, but this is very difficult to do because there's a money involved, the loss is involved, and your psychology is also involved too. Nobody wants to lose money. I don't want to lose money too. I don't want to lose any money from the market. So, but losses do happen. I know that the losses do happen, and we have to cut losses as soon as possible to wait for the next chance in the market. So let's say the price goes down initially. It didn't go up, but it just go down. So I would exit once, and if I start to see the support here, if I start to see a pushback, and if the market goes back into the range, and if the market bounce like this, then goes up like this, then I will take a buy, for example. So this is going to be a second challenge, and in this case, the chance for the market to go up will be relatively higher because we see the bullish N wave structure here. So it's more reasonable to take a buy here, right? But what if the price goes down? After you take a buy, then the price start to go down again and go all the way down. In this case, you have to exit either here or here, because this is now broken this bullish end wave confirmation. But now I think it's gonna become a bearish end wave, and the market starts to go down this way. Then you have to exit on these places. So if you master stop loss, then basically you master the trade. The take profit is also important, and how to capture trend is also important. How to use Ichimoku perfectly will be important too, or any indicator lines. But this stop loss, if you master the stop loss, then you can be the very master of the trades. And that's why my focus was on the stop loss initially. I was always looking for where will be the reasonable exit timing before I move the stop loss to break even. And that's what I'm good at. I always cut loss. Even the price even the price hits a stop loss, or before the price hits a stop loss, I exit usually. If I can't see the market, then I will just let the price hit the stop loss. But if I watch the market real time, then if I start to see this kind of reverse end wave setups, or any sort of this like a reverse setups, then I will just exit soon. And that's my mindset. So do not put the stop loss just hoping that the price won't hit the stop loss, or don't hit the don't place a stop loss depending on how much risk you want to take trades. But place a stop loss, or potentially the scenario is broken of yours. Alright, so let's see. Oh, I get some comments now. Alright, ADUSD, I will talk about it tomorrow on this Ichimoku Forex forecast. Yeah, but head and shoulders will be great timing to exit already if it goes backwards. Yeah. Please advise us, should we close a position earlier even if has not touched our stop loss value yet? Yes. When taking a trade, you must always have a stop loss as well as take profit planned before taking the trade. Exactly, Michelle. Yep, that's very important. So let me just keep talking. Oops. So yeah. So basically, these are 5 points. You cannot keep discipline when you start to struggle with the stop loss. Okay, so that stop loss is very important to maintain your healthy mindset. And also, chart is everything, and there is nothing right in the market. Anything can happen in the market. So, and you cannot control the market. So you have to deal with it with these losses correctly. And also, therefore, you need to have your own rule. And if market goes based on your rule, then you keep the position. If not, then just cut the position. And there is no correct indicator, correct method, or right. There is no right indicator, or there is no right method. Indicators is indicators, and lines are just lines, and methods is just method. Like strategy, my strategy, KTS strategy, is just one of the strategies, and there's no answer to that strategy, or there's no answer in indicator. So creating scenario is very important, and the answer is in yourself. And that's the point for today's lecture. So I ran the Forex Tester to test this stop loss strategy, which is very effective. Forex Tester has been one of my favorite tools for the last 5 or 6 years. I have been running the Forex Tester 4 or 3 or 2 in the past, and it's been a great source of testing my strategy, especially the stop loss. And also real trade chart with a demo account will be another important way to train and obtain a rule for the stop loss. And also, if you're interested, you can join my global training school for this mentoring course. So let's take a look at a couple of markets to see more examples from the real charts. So let's see. So just forecast, create your own scenario, and the scenario will be different among any traders. I have my scenario, and you have to have your own scenario too. And to help build this scenario, there's Ichimoku, there's lines, and there's KTS. But essentially, the scenario should be different among any traders. So I think a great example would be this one. I will just take this USD-CAD daily chart as an example in this case. So right now the price is in the Kumo, and this is bullish in the wave structure. Bullish in the wave, and now the price is retracing backwards. And currently the price is in the Kumo, so this is not the perfect timing to enter in the market. But what we can find is that there was a Tenkan-sen, Kijun-sen, gold cross, and Chikou span breakout happened already. So if you start to see next week, if the price breaks this Senko span B upwards, then this is going to be Sanyaku Koten signal. And we know that this is bullish market now. But once again, we don't know the market, right? After the Kumo breakout, it can go backwards too. And what if the price goes backwards? Then where would you cut the position? Where would you take the loss is the question. So one of the timing for me to cut losses when this bullish wave structure is violated. So after the price breaks the Kumo upwards, and after this bullish wave form here, and afterwards the market retraces backwards, and when I start to see this bearish wave like this, then that will be exit timing. That will be exit. Yes, we saw this Kumo breakout, and potentially this is bullish trend, but after we start to see this roll back end wave, the Chikou span might be resisted by the Kumo at that time. But anyways, if the market starts to go backwards, then we have to exit. Oh, so there's no bullish trend? And my answer is no. This is now retracing backwards. But if the market starts to go up with this bullish wave and breaks this high upwards, then this can be the potential bullish trend too. So I would look for again the buy chance from here. But here, if we start to see a reverse wave, it's nice to exit once and just see if the market still wanting to go up. And if we see a bullish confirmation, then we can re-enter the market to buy. Alright, so that's one of the ways to identify where to put the stop and when to exit and when to re-enter the market. And that's what I've been doing all the time when I look at the market. So yes, of course, Sanyaku Koten signal is very important for its bullishness, but it doesn't mean that the market keeps going up afterwards. It can go down too. So how to deal with this reverse or the retracement is very important. And that's why stop loss or how to take losses correctly is very important. Because we're not here to gamble, we're here to build these scenarios logically and expect all the scenarios, and if the price goes backwards, then where to cut the loss to re-enter the market is very important. Okay, stops depends on period in which you take trade and the period that you take for analyze the direction. Yep, that's true. So yeah, if you depend on this daily chart, then a daily chart will be reasonable to find a stop loss place. I look at the chart multiple time frames. I look at the chart in a daily chart at higher time frames, mid time frames, and lower time frames. And I take trades in lower time frames, and that's why my stop loss depends on the lower time frame waves. But if your strategy depends on the daily chart, then the daily chart should be reasonably should be the one to look for the stop loss price levels. Perhaps this will be discussed, but how do you deal with increasing and decreasing spread along the stop loss order placement? Yeah, that one is I just no matter how many spread there will be in the market, I just take it and I will just let the price hit the stop loss. Yeah, sometimes when the market volatility increases, then the spread will increase too. In that case, I might lose a position even before the price hits the stop loss because of the spread, but that should be already into consideration when I place that stop loss too. Alright. Lois says, hi Kay, have you ever been into a situation where you see a strong confirmation trade will go according to your direction, but it hits the stop loss first, then it goes to a direction? Oh yeah, that's true. It happens a lot actually. It happens to me so many times. So let's say the price, reverse N wave happens and I lose this position here, and afterwards the price start to go up again, like this, right? So yeah, so that's another important psychological topic here. So, and that's why I mentioned about the rule. If this is a rule, if this is your rule to exit, then you have to exit. Because if you keep changing the rule, for example, we take a buy here, and your stop loss is here. So hold on, let me redo. So you see Sanyaku Koten signal, you thought that the price goes up, so you take a buy, but the price goes back towards the direction, and the market breaks the recent low downwards initially, and then you exit. You exit here, and then afterwards the price goes up like this. So in this kind of case, I still take the loss, because this is my rule. This is my rule. And then I will re-enter the market whenever the chart is favorable to my strategy. Or I look at other charts to find other trading edges. But if, let's say so you cut the loss here initially, and you thought that, okay, so if I put the stop loss wider, like here, then I won't lose, and the price goes towards towards my direction eventually. You might think like that. Okay, so next time I will put the wider stop loss so that I won't, hit the stop. But if you keep changing the rule this way, then you will never get to find a solid strategy. Yeah. So that's why it's always important, and this is the thing that I keep saying, that is that you have to keep your own rule first. Once you set the rule, then just keep it and take trades. Keep taking trades. And to build up your strategy, your rules or strategies, you have to backtest by using Forex Tester 4 or you can create a demo account and you can look at the real charts and take trades to build up this strategy. So far, my strategy KTS has been working for me, and that's why I keep using that strategy. That's why I look at multiple time frames. When it comes to finding the trading edge, I look at the lower time frames. But when it comes to capturing the trend, when it comes to understanding the bigger picture of the market, I use Ichimoku Kinko Hyo in the daily chart or higher time frames, and I understand the market situation as a whole in the bigger picture. But when it comes to taking a trade, I look at the lower time frames so that my stop loss can be as tight as possible, but my reward can be greater, because my reward depends on the daily chart, but my risk depends on the lower time frames. And that is my strategy. And I came up with this strategy by backtesting myself for the last 5 or 6 years of my trade strategy. Past experience, I have created this strategy myself. So yeah, before you take in trades, first of all, create your own rules, and depending on your rule, create a scenario before you take a buy. So once again, if you see the Kumo breakout and take a buy, before you take a buy, then create scenario. I always say create 3 types of scenario. What if the price keeps going up this way? And what if the price keeps ranging this way? And what if the price goes down to this way? Always create 3 scenario in your mind every time you take a buy or sell. And then where to exit, when to exit, or where to exit is the questions you want to ask yourself every time you take trades. And to cut the loss, or to whenever your scenario breaks, that's where the stop loss should be. That's where the stop should be. Alright, if I'm following Ichimoku, where exactly to put stop loss and what is the best ratio of stop loss and take profit? So it depends on when you take a buy or sell. If you take a buy, in this example by this Sanyaku signal, then where would this Sanyaku signal be broken? That will be when the next low, the recent low, will be broken, right? This is one of the timings when this Sanyaku Koten signal was broken. So it's reasonable to exit here. Or if the price breaks the Kumo downwards too. Yeah, if the price breaks the Kumo downwards, that will be another confirmation for this Sanyaku Koten signal wasn't working in this particular situation. So that was another timing for exit. And also I would look at the Kijun Sen break. When the price breaks the Kijun Sen, then that will be another timing for exit. So yeah, and always make sure to backtest your strategy to be confident on your stop loss, or where to take the stop loss. Yep. Alright, let's see. Hi Masayo, thank you for joining. To see you. Doing great job, thank you. Alright, you're welcome. You're welcome. Always have a demo account when not certain about the trade. Just take demo to gain real-time experience. That's true. It seems that trading is a process involving scenario building, possibilities and probabilities. Yes, that's true. All subject to external news and events. This is what I've observed. That's true, Danish. That's true. And to create these scenarios, there's indicators and lines and all different tools. Ichimoku Kinko Hyo. So we cannot depend on Ichimoku Kinko Hyo 100%. We cannot depend on, we cannot I already put the stop loss or take profit target depending on these 5 lines of Ichimoku. But it should be, the stop loss should be depending on your scenario. Okay? And Ichimoku gives you a decent place, decent signals, so to speak, for this reversal retracements after you take a buy in this particular case. So yeah, so let's say the price goes up, Sanyaku signal happens here, and once the price goes into the Kumo, that will be a great timing to exit, I would say. Yeah, in reality, I won't wait until the price breaks the Kumo downwards, because this is daily chart. So once the price hits a Kumo here, then I will exit. Because after Sanyaku signal, I expect the price continue to go up this way. If not, then I will exit. But to create these scenarios, Ichimoku 5 lines will help a lot. Right below the Tenkan-sen, alright? Tenkan-sen becomes support. Yep. Can we use Kijun-sen as stop loss? So we cannot really decide whether to take Kijun-sen or Tenkan-sen for stop loss. We cannot do that. Yeah, it helps you to create scenario, but you cannot depend on these lines fully 100%. Alright, K-Young, thank you for the reminder, and Yasar too, for the like button, as always. What are the best pairs for Ichimoku to take trades? Any pairs will be working. Any pairs, any commodities, any indexes, stock markets. I use Ichimoku for Forex trades. I look at the major pairs in Forex and it's been working. And it works in any markets. I often have an entry where I would have a stop loss on lower time frame and I use the trend on a higher time frame. That's a good strategy. Yeah, that's a good strategy. You can always look at these higher time frames for the trend, but look at these lower time frames for these stop losses. Yeah. Right? Would it not be better to wait for a pullback before taking a buy above the Kumo? Oh yeah, you can wait for the pullback above the Kumo and enter the market. That's possible. So you can wait for the pushback and enter the buy here. Yep. That's one way. After Kumo breakout, most probably one Sandan will become complete, because only a Sandan has a power for Kumo breakout, hence pullback. Yeah, Sandan is a great indication for this continuous uptrend. Yeah. You enter a trade with lower time frame and then with lower risk in 15 or in 5. Yep, that's true. Can we use Fibonacci retracement as our stop loss? Yep, Fibonacci retracement can be the stop loss lines too. Yeah, so Kumo, Kijun-sen, Tenkan-sen, Fibonacci lines. Yeah, you can take any lines for the stop loss. As long as it's part of the scenario, that's okay. So yeah, try to build up your confidence on your own strategy, right? Do not have your confidence on the indicators, lines, or tools. Tools are just tools, indicators are just indicators, and lines are just lines. Sometimes it works, sometimes it doesn't work. But if you keep depending on these stop losses on these lines, you will never get to the answer. So better to build up your scenario first, and then depending on the scenario, if the market violates your scenario, then that will be the perfect timing for exit. And that's what I wanted to say for today's topic. Alright, so I guess I will be ending the live for now. So yeah, tomorrow there will be a Ichimoku weekly Forex forecast. Every Sunday, I give a Forex forecast. So I cover these pairs and commodities and indices. So if you're interested, please join tomorrow's Forex forecast. And for those who are Ichimoku members, I will see you on the membership live afterwards. So, yep, I hope you have a great weekend this week. In Japan, Tokyo, it's been very cool. Very nice weather, very nice cool weather. And yeah, no more heat, no more like humid. It's very nice weather. So it's nice timing to hop out and yeah, just walk around through the town. So I hope you'll be safe and healthy and stay gold. Bye for now. またね. Thank you.